I want to welcome those of you who are joining us. My name is Guy Shiraki, and I serve as the CEO of the Chester County Chamber of Business and Industry. This is another in our series of events focused on helping our members, but especially those in small business, or the many individuals who over the last year and a half may have found themselves in gig work or secondary work, trying to make ends meet as we went through COVID and the various restrictions and lockdowns. This is the third in our ongoing series. We've previously held events dealing with human resources issues and also on legal issues. Those seminars can be found on our webpage, where you'll be able to find a recording of this event in the next several days. So you'll have a whole series of everything from HR to legal to tax issues to try and help you, help your business, help your family prepare not only for 2020 taxes, but for 2021 as well. Today's event is, again, one in that series. I would encourage you, if you have questions, to begin filling the chat box. We will do our best to get to as many questions as we can. For those questions that we cannot, we will try and follow up and do our best afterwards. In addition, you'll have the ability to connect with any one of the panelists offline, as we do customarily after these events, particularly the ones where we're offering help and guidance. We make sure that everyone can connect after the event and continue dialoguing. So with that, as our sponsor has now joined us, I'm going to turn the floor over, so to speak, turn the microphone over to Jeff Sheehan. Jeff is a member of our board of directors and a senior vice president with Meridian Bank. Meridian has been not only a great supporter of the chamber, but has been especially focused on helping small business and has been the prime sponsor of this series of events. With that, I'm going to turn it over to Jeff to offer some remarks before we begin our program. Good morning, Jeff. Glad you joined us, and thanks for Meridian's support for this program.
Perfect. Good morning. Thank you. Sorry for the technical difficulties getting on there. As Guy said, we're happy to sponsor Meridian Bank's a Chester County-based but regional presence business-focused bank. And if you were on the last call a week or two back, I think the one piece of advice we share and we encourage everybody is to build your team of advisors that include a solid banker, a solid lawyer, and most importantly for today, a solid accountant. So with that, I'll turn the mic over and let the program resume.
Thank you very much. And thank you for Meridian for their support for this programming series. One of the things that we were able to do with the support of our sponsors and our board since March of last year, and who would have thought that 54 weeks later, we would still be continuing 2 weeks to flatten the curve. But here we are 54 weeks later. And I'm so grateful to our board and our sponsors that because of their financial support and offering their talent and expertise, we have offered a series of events now for 13 months at no cost to participate. We felt that it was important for our members and the business community at large that information that related to everything from PPE material, safety standards, lockdown guidelines, reopening guidelines, and now getting slowly back to normal. We wanted all of that information to be available to you free. And in addition, as I said, our team has made sure they're available on our webpage, and you can go back and view any of them. If also after the fact you have questions for any of the experts we've had over this whole series, please let us know and we'll connect you. We felt this was particularly an important topic. And while tax season is just around the corner, as we were remarking before the program formally began, just around the corner keeps expanding. Tax day is not April 15th, it's now May 17th. And that was Congress's attempt to recognize the unique challenges, not only after the year we just went through, but understanding that Congress themselves, on at least 3 occasions, has made substantial changes in legislation. And in following up, the IRS has made some regulatory and guidance changes to follow up with that legislation. So if you're running a small business, or if you started a small business by necessity, or the entrepreneurial spirit hit you in 2020, you're facing some opportunities yet challenges complying with filing your 2020 taxes. And as we sit here towards the end of March, you can see already that there will be some things you're going to want to be mindful of in preparing to get ready for your 2021 filings next year. So we're very fortunate to have a group of panelists and experts from the many that serve our chamber and our chamber members. We shared previously their resumes or CVs, so I won't go through it, but I do want to recognize and thank them in the midst of one of the most hectic tax seasons ever. I want to thank them individually and their firms for allowing them to be with us. We have Tricia Richardson from RKL LLP. They're a statewide firm and their local office is in Exton. Ryan May is with us from the firm of Stefano Slack, and Mike Stefano, a principal in Stefano Slack. Mike is also a member of our executive board, serving as the chamber's treasurer. So we have to be on our best behavior with Mike when he's on board. I want to again thank you each for being here with us in the midst of a very hectic tax season. I want to begin today's discussion by asking an open question. I'll begin with Tricia and asking each of you, what do you see as the biggest tax challenge that small businesses are facing when filing their 2020 returns?
Well, for the biggest issue with taxation, I think employers are facing, well, we have the retention credits, we have all the credits that are out there, but also with the constant changes, are we eligible? Can we go backwards? But then just in general, taxation, small businesses all businesses are struggling with remote workers and multi-state taxation. And that's a pretty big trend happening now because every state's different with that. So the taxation with multi-state remote workers is going to be huge. And then the other corporate filings that go along with that. So big uptick in that.
Thank you, Tricia. Ryan?
Make sure I unmute myself there. I mean, that's a loaded question, right? There's a lot of challenges last year, this year, navigating COVID, staffing and payroll for your businesses, working from home like I'm doing right now. But a big challenge is gathering all the necessary info to file taxes for 2020. Whether it's mail delays or getting your 1099s, your K1s, or just closing the books for last year. It's very important to get all this information together as soon as you can, get it over to your accountant. That way you can file for 2020 and start focusing on 2021, which we'll talk more about later. There's many other things we could talk about here. Stimulus payments, did I qualify, did I not? Do I qualify now based on now I filed my 2020 return? Unemployment benefits, they just came out with new legislation earlier this month and changed the taxability of them. If you filed your tax return prior to March, what do? They changed the law, and the IRS does say don't file an amended return. They'll recalculate and provide a check for the difference, but things are constantly changing. So it's just navigating all this new legislation and getting your stuff together is what I would say.
Thanks, Ryan. Mike, what are your thoughts on this?
So I'll follow up with a little bit what Ryan said. Organization is always the most important thing when we talk to our clients. Make sure that their paperwork is organized. Make sure that they have all their books and records in order. Very important. Most accountants are still virtual. So, you're doing things over the phone, you're doing things through the mail, you're doing things through email. So it's much more important this year to be organized than ever. One of the biggest things that we're finding currently with most of our clients is that, they're getting tax notices. And those tax notices, some of those tax notices are incorrect. Some of those tax notices are coming in that are asking for responses that have already been sent 2 and 3 times. So, and that's a big deal. We've had 2 or 3 clients with significant overpayments that had not been able to get their overpayments refunded to them. And the IRS came to them and basically said, hey, we're looking for your tax return. We actually had to get Senator Toomey's office involved for 2 of them because they were such large refunds. So understand that if you get a tax notice from the IRS, address it, send it to your accountant, make sure that they're aware of it. But also understand that, if you did send it to the accountant before, hopefully they did respond, and the IRS is just completely backed up. They're completely understaffed. They don't have enough people to answer the phones. They barely have enough people to process tax returns. So it's, patience, I've always heard that patience is a virtue. And I think this year, with whether it's your accountant or your IRS or the IRS, you need to have patience, because it's not going to get any easier to file your tax return over the next year or, year and a half there.
Thank you. I appreciate that. There. Next, we had shared with you a choice of two different question paths to go down. And Ryan, first, we're giving you two options, and Ryan, you had selected the second one. So I'm going to share the question, then we'll go to you. What's the most important advice you could give to a small business now as they plan thinking ahead to next year? Because again, when you're preparing your 2021 taxes to file next year in 22, there's now all of the changes that have been passed in the last 15 months now apply. So what would be some advice you'd give to small businesses looking ahead to next year, how they can be better prepared and organized?
So a couple things there. I would plan on higher tax rates for 2021. The current administration has stated that they won't raise taxes on W-2 individuals, households earning less than 400K. We'll see how that shakes out in the end here, but depending on your business income and the deductions available to you, which will change with new tax law, you'll likely end up paying more taxes. So I think planning ahead, planning on higher tax rates, my advice would be to get in front of this with your accountant, talk about planning for 2021 and pay your estimates. Make sure you have your estimates paid in. And that leads to the second point that I have is make sure you pay your tax bill and your estimates online. And that kind of goes to Mike's point of, the IRS Pennsylvania being backed up, low staffing, processing mail. It's much easier to pay your estimates online now. And both the IRS and PA allow you to do that. It's pretty simple to create an IRS account. It takes a couple minutes. But for Pennsylvania, they have a new platform on their website called MyPath. And registering for that, part of their process is they send you a letter in the mail that has a PIN number or a registration number to confirm your identity. So you have to go through that process. It takes a couple of weeks to get that letter. I've tried it. It works. You set up an account, you can pay your estimates, your tax bill online. And what's the benefit, right? The benefit is electronic deposit. It's processed quicker. You have that emailed receipt that you have. So if the IRS or PA were to ever challenge it, the timing of that payment, here you go. I made it on the deadline or prior to the deadline. I shouldn't owe interest and penalties. So those are the two things that I would say is plan on higher rates, get in front of your accountant, and pay your bills, tax bills online.
Thank you. Tricia and Mike, the question we had shared with you and asked you to think about was, again, without revealing client confidences, but as you're talking to your clients, as you're helping them prepare, how many of, what percentage of your clients did you see that had employee reduction or income reduction? Because we're all trying to get a sense looking at various data points. And you would certainly present us with a snapshot of this region. So what percentage of your clients saw a reduction? And if you would, what are the initial indications of those employers, of those businesses that may be looking to rehire or bring some people back in 21? So Tricia, first to you, and then Mike.
Okay. Yeah, so it depends really on the line of business. We work with senior living facilities, and they were essential. So their biggest issue, one of them was just getting employees in. So they were pretty steady with their revenue. It was more an issue of employees, someone to do the work. Restaurants, devastating to restaurants. And even some of the small manufacturing firms in the beginning. So really looking at it from the line of service, those that were essential, absolutely, they're solid. The biggest thing with those businesses is finding a better way to do business, keep employees engaged, make them feel safe so that you keep them, because it's high risk and there's fear. And then for the other businesses, it's I've worked with several clients who have found new ways of doing things. Will use the skill sets of their employees and said, hey, can we try this? So I think the ones most hurt are going to have to reorganize, revamp. For employees, there was an issue in the beginning with the unemployment, that extra unemployment being, $600 extra a week. It was really hard to get employees to come back. We're seeing a little bit more of that now, but with the 300. But I think employees, what I'm sensing is in beginning around December, actually, of last year, employees want to come back. Everyone wants to get their life back to normal as usual. It's just finding new ways of doing things, because it's a whole new business world. And then technology is a huge piece. I think that's that impact to employers who weren't as technologically savvy has been seen, because they suddenly had to do everything remotely and their paper. So I think that's been a huge impact too. So it's a whole new world.
Thank you. Mike, what have been your observations in working with your clients in terms of how many took losses in 2020, and losses in sort of layman's terms, or had to let employees go, versus those that perhaps are looking a little more optimistic and bringing folks back in 21? What have you seen?
I'll kind of reiterate what Trish said. It is a very industry-wide, or it's an industry-specific issue. Your hospitality, your restaurants, your businesses, retail that dealt with, retail on a regular basis were really struggling and really got hurt. The businesses that were in large manufacturing and really business to business did not get hurt. So most of our clients, most of our businesses that were not in those industries were either flat or a little bit up. We had one client that closed that was a specific, it was a business that dealt specific with a specific industry, and that industry went away. So they ended up closing. It was about 500 people. So it's it's out there. It really affects it. Number one. Number two is, businesses that dealt with retail and hospitality, those businesses are struggling a little bit as well. The interesting that I'm finding now, and I think it's going to happen more often, is that there's a lot of businesses that did not want to sell in the past, but going through the pandemic and having all the things that Trish just mentioned about, changing their workforce and understanding their workforce, there's a lot more businesses that are going to be selling. So going back to tax and going back to accounting, and how does this all tie in? Well, once again, if your numbers are organized, and you're organized, your tax returns are filed on time, and your taxes are paid, if you have a thought process that you're going to sell your business, you're going to have a much better package than you would if you're late on filing, if you're not organized, and if you're not being able to, utilize, technology, your accountant. So those are really the two big things. There are a lot of those businesses that retail struggled. A lot of businesses are really looking. There's a fair amount of businesses that are looking for exits, and that's going to be a telltale sign over the next 6 months to a year to see how many businesses are actually sold.
Thank you. That's a very interesting insight, and something certainly to keep an eye on, because it'll have ripple effects in our region. One of the, and I would encourage the audience again to please send questions in the chat. We'll try and get to as many of them as possible. One of the questions I had gotten actually by text is that last year may have been the first time that many people suddenly took on a second job. While that's not uncommon for a lot of filers, there were a lot of new people that in 2020 had a second job by choice or need, whether that was they became a seasonal worker at UPS, or they started driving for DoorDash or Uber. You have thoughts on, those employees that may have had a traditional job, if you will, a 9-to-5 job, which I'm not sure anybody has anymore, but a traditional job. And then all of a sudden you became an independent contractor or sole proprietor, that second business. How do you go about preparing those things for the first time and sort of getting your stuff together and, if you will, marrying that to the traditional pay with the W-2, then all of a sudden you're your own employer because you've been working for Uber or DoorDash or something? How does that all work together? Tricia, let's start with you.
Wow. So yeah, we're seeing that a lot as well. I think the key is to, first of all, make sure you shouldn't be an employee. That's starting to come up again with Uber. Should they really be employees or independent contractors? I think the key thing is to let people know you're now the business owner. So your taxation is different. Your whole way of doing business is different. You're going to need liability insurance, and you're going to need to understand how contracts work. And I think the biggest thing is preparing them for that taxation piece because it's so different. And we recommend for all of our clients, everyone that we talk to, that they use that IRS withholding calculator that helps you complete your W-4. Check that at least twice a year to see where you are taxation wise. I think especially for families, this is big. If you had both spouses doing that traditional work and now one is not doing that traditional work, the impact to the whole family taxation. And so just to be on top of that and make sure they're on top of that, especially with what Ryan said, that the taxes are, they're going to go up. And you have to be prepared for that.
Mike, what are your thoughts on the, those who are new to suddenly being their own boss or having a second job and how they compile and calculate everything?
Yeah, so Guy, when we get a new client or someone who is starting out in business, my first comment to them is make sure you know what you're doing, right? So I'm an Uber driver. I set up my own handyman shop, and number one, as Trish said, make sure you have insurance. Make sure you have an LLC, or you understand that you're a Schedule C. Those are they're the basics. And then what I tell them is put 35% away. And they say, well, where do you come up with 35%? I said, well, if you're in a 20% tax bracket and you're going to pay 15% in Social Security, and you have 3% that you're going to have to pay to the state of Pennsylvania, it's probably a good idea to have about 30 to 35% put away. And they said, well, what do I do with it? I said, put it in a bank account. Take an account, take 65%, and that's yours. 35% is the federal government's. And when you're working at a job, that's already done for you. And you have those taxes taken out. So you're not really cognizant when you get a check from somebody that, hey, I got to put 35–40% of this away. You're not thinking about that. And then what happens is over a period of 6 months to a year, these people can get themselves in big holes. And once you're in a big hole with the IRS and you owe them 5, 10, 15, pick a number, thousands of dollars, interest and penalties ramp up very quickly. It's very expensive. And you need to make sure that you're really doing that. So understand that, have insurance, understand what you're doing, make sure you understand you have contracts and agreements, but take 35% of that money, put it in the bank account, make sure you're talking to your accountant. And number two is, if you are doing that, make sure you're paying your estimated tax payments, because the IRS doesn't care. They don't care that you were an employee last year, and they don't care you're a subcontractor this year. If you have an underpayment on your taxes, they're going to hit you with a penalty. And the penalty is not cheap. It's 10%, and then they charge interest on top of it. So that would be my my quick suggestion to anybody starting in the business, in any business.
Thank you. We have another question that came in. Ryan, I'm going to begin with you, dealing with the employee retention credit. Actually, say hello and good afternoon to Colin Hanna. Colin used to be, at one point, was a county commissioner here and chaired our Board of Commissioners of Chester County. He's been very involved with Let Freedom Ring. Colin's question is regarding the employee retention tax credit. He is under the understanding that it's contingent in some ways upon the actions of the governor of Pennsylvania or the state you live in. If the governor were to declare that all the restrictions are over at a point, would the employee retention credit end, or would it end at a certain quarter? And how would those dates interact? And if all the restrictions were lifted in June, what would that mean? If they were lifted in October, how would you go about calculating, and how does that interplay work? And what would be your guidance if that happens? So Ryan, we'll begin with you.
It's a very good question. And to be honest, I would be guessing at some of the specifics at that. So I might not be the best person to comment on the dates and whatnot, but it's a huge topic, right? Because it applies to the prior year. It applies to the current year, and people waiting on their 2020 returns. Some businesses are holding their returns because of this credit. This credit affects their deduction on that return, just like an R&D credit would be. You reduce your expenses, you take the credit, it flows through to you. So it's a big topic, it's important. I'm not sure if either of the other panelists, Trisha or Mike, have any comments on the dates there, on the specifics of that question.
Sure, thank you. Trisha, any thoughts on that?
Yeah, so that's a great question. There's so much to the retention credit. It's kind of hard to navigate. You have to kind of look at it step by step. It's a federal program. So Pennsylvania, if they open up, I think it's going to be difficult for them to open up and still not meet some of those CDC guidelines, especially with the vaccine that may not be completely out there for a while. So I think that there's going to be opportunity for still shutdown eligibility. But again, the 20% reduction in gross receipts for 2021, that's a much easier threshold for employers to reach when compared with 2019. So the credit federally is out there through the end of the year. And it's just, finding out your eligibility. The other part of that for employers that have businesses in every state is to really look at, what are the restrictions here in Florida? What are the restrictions in Pennsylvania? Do you do business there? Because potentially, if you have a shutdown in Florida, and we now have a true number on impact, which is 10%. If that Florida business, what was shut down, is 10% of your normal revenue for that quarter, and by normal, we're always saying 2019, that is the last normal, you would still be eligible federally, even if Pennsylvania is completely open. So looking at your company holistically and where you are. It
Thank
really
you.
is this, and this.
Mike, is there any other considerations you would suggest on how you go about anticipating that or dealing with it if it happens?
Well, I think Trish laid it out really well. Number one. Number two is, and some of this is still to be determined. They're still writing the rules. They're still implementing new guidelines. They're looking to push out the PPP loan application. So it's a very evolving situation, but I think Trish and Ryan really laid it out well. At the end of the day, you really look at, if you're looking at your gross revenue and you have a reduction, or if you were shut down, those are the times you ask the question. If you didn't lose money and you weren't shut down, then you're probably going to not qualify. So those are really the things you want to look at. If you got shut down, or if your revenue is decreased, then you talk to your accountant and figure out if you apply for the specific, whether it's a specific area, specific, and they talk about area, they talk about, a specific type of your business. If part of your business was sales and the other types manufacturing, you really get to look at those as well. So those are the things that's what I would add, Guy.
Okay. A topic that has come up in many conversations as I've talked to chamber members who, again, this has been uncharted territory. So we've had new things happen at work. We've had new things happen at home. It was not uncommon in 2020 or 2021 for the number of people in your home, for that number to change. Perhaps your kids came back. Perhaps a parent moved in with you. Are there things to be mindful of in terms of dependence or expenses or care that you as the filer, if or you're a couple and you're filing and all of a sudden your 20-year-old daughter is back home and living with you, does that something to be cognizant of? If mom moves in and all of a sudden you're shepherding mom to the doctors and doing things, I guess in short, does it matter in terms of your taxes if all of a sudden your children or your adult parents move back in with you and you're taking care of them? I know words like dependent and all that stuff has loaded terms, but in plain language, a house of two may have become a house of 4 or 5 in 2020. And what are the implications? Anyone want to take a stab at that for some guidance? Mike?
I'll jump on that guy. So it really comes to what's the definition of a dependent, and how much support are you paying for that individual? And if you pay for more than half of the support of an individual that's living in your house, then you have the ability to claim them as a dependent. That's the way you look at it. You look at the rules and are they dependent? And then you look at it and say, okay, if I have my 22-year-old son who was at college, who has a job, who's making $25,000 or $30,000 a year, is that person a dependent? Well, you might consider them a dependent because they're living at your house and they're eating your food, but they might not consider themselves a dependent. And everybody needs to be on the same page when you file a tax return, because if Bobby Joe files his tax return before mom and dad and he claims himself as a dependent because he's making $25,000 a year, mom and dad try to claim him, guess what? That return gets rejected. And if it gets rejected, you're not going to get your tax return reviewed or your refund back for 12 weeks. So always communicate with the person. But number one, it is, are you providing half of that support? And just because somebody's moving into your house does not mean that you're providing half of the support for them to be claimed as a dependent. That is, at the end of the day, the answer.
Can I add something to that real quick? So because what we're recommending employers do for their employees is to let them know, to, be ahead of this. Here's all the things that impact your taxation. So please look at this if anything's impacting you, and look and redo your W-4, because on the employer side, what happens is, we see this a lot, they owe money at the end of the year and come in to the employer and say, you did not withhold enough money. Well, that's because you didn't know you needed to withhold more money. So to be on top of that, to just let employees know, because changes, unemployment, wages, kids, daycare, that daycare expense going away if they're home with you. So to just be proactive and letting employees know so that they're prepared. And it does put it in front of them then as well. Oh my gosh, I didn't know that. So.
Yep. Ryan, any thoughts?
Yeah, just one thing here with tying that all in, and those are great points by Tricia and Mike, is that this ties into the stimulus payments, right? So this third stimulus check is a little different because they include now child dependents under 19 or under 24 if that child is a student. So it depends, again, going back to the rules, and you'd have to look at those about whether they qualify for as a dependent or not. But if they are, and they're included on your return, that's going to be a 2021 item, is that stimulus payment, the third one for that dependent. Those qualify, and other dependents qualify as well. Parents, disabled individuals, adult dependents, there's a lot of things that go into that. So make sure you're taking a look at the stimulus impacts of those dependency claims.
So thank you. The last question we have before final comments, the last question which I'll throw out is, again, part of the unusual times as I'm here in my home, and some of our panel maybe as well, is that for a large part of 2020 and even into 2021, our homes became our offices. And even though you may still be working for, the ABC widget company, all of a sudden, electricity, ink cartridges, paper, so you may have incurred these expenses. The question is, when might they or when may they not be expenses that you are able to take for deductions what are some guidance, if you still remained as an employee at work, but all of a sudden you had to expend extra dollars because your basement became your office. So, Mike, you want to take a stab at that?
So yeah, absolutely. One of the things that was in the bill, the first CARES Act, was that employers were able to reimburse their employees for those costs. So I know there was a fair amount and not included on their W-2. So as long as you were in a disaster area, which the entire United States was, your employer was able to reimburse you for certain costs, and that would cover buying the internet, ink cartridges, paper, blah blah blah. So that is what a lot of our clients did. On the personal side, Ryan or Trish, do you have a general thought process on what we do there?
Yes. So like Mike is saying, for W-2 individuals, if you're a W-2 employee, you cannot take the deduction for home office expense on your tax return. You have to be self-employed, and that changed with the Tax Cuts and Jobs Act. So that's pre-2018. So that miscellaneous itemized deduction is gone. No home office deduction if you're a W-2 employee. You got to be self-employed, and if you have self-employment income, you have a home office that's strictly for business purposes. You can take that deduction and offset your Schedule C, your K-1 income, as long as it's not reimbursed by your business, or paid through the business. So that's an important distinction. There's many other rules in that area, whether or not you can take it, square footage, for example, where I am right now, I'm in my living room, but this isn't a designated spot for me, just for my home office. So commingling spaces, there's a lot of rules there, but general rule, W-2 employee can't take it, ask for reimbursement from your employer. And if you're self-employed, look at those costs because you can take it.
To just add on to what Ryan said, the other thing that's coming up is some states are actually now requiring employers to provide employees with equipment if they're remote workers. And we're seeing that legislation come up in some other states. They're really looking at this as this is how folks are doing business now. And, so the taxation might change on that as well, depending on how they set that up. But to look at that, what's happening in those states.
Thank you. As I'm going to come back to each of you and ask for a final comment, I want to just share a few things. First, to pick up on Tricia's point, as I work from home, my wife works for another business and has been at home a great deal of time, and she works in the area of employment law. I would tell you that our good friends in California, in approaching this issue, have begun to consider the issue as to whether people working at home have had to have increased or additional trash pickup, and whether trash pickup would be a deductible expense or something you could ask for your employer. So I just share that to see how far in the weeds we could possibly get if things don't turn around and we start returning to normal. I want to thank each of you for being with us. Again, remind our audience, whether you're watching this live today or whether you're watching it later through our website, that again, we have a series of webinars that we've provided on tax issues, legal issues, and human relations, human resources issues for the how to safely reopen and deal with employee issues as we all return to normal, from issues from the law to tax, employer-employee relations. All of us will need a little extra guidance and thought as we handle the aftermath of 2020 and prepare for 21. Whether you see this again live or watch it tape recorded, please let us know if you have any questions or comments. We'd also share with our audience that if there are topics we can help small businesses with, help our nonprofits with future programming, or even perhaps some fact sheets or information we could share, please let us know. I want to thank Jeff Sheehan from our board and Meridian Bank for being our sponsor today. I'm going to go around to the panelists and go to Tricia, Ryan, and then Mike to offer your final comments to those watching this program. And thanks again for your expertise in taking time out of a very hectic tax season. Tricia, your thoughts?
So thanks again for inviting me to participate. The biggest takeaway, I think, for employers to think about now is just because you've always done it that way, you're not going to be able to probably keep doing it that way. And that's something very common from the payroll HR perspective. We hear a lot is, well, I've always done it that way. Why do I need to change? Well, first of all, it may not have been right in the first place, but we won't go there. But really, you have to open your mind up, and it's a do-over. Everything is a do-over, and to open up to be more creative with that. And I think that's a challenge for a lot of companies. Change is not always well received.
Thank you. Ryan.
Yeah, I guess to summarize some of the things is make sure you're gathering your info and getting organized. Get your 2020 taxes filed, start looking ahead for 2021, plan for 2021's potential rate increases, and talk to your accountant. Get in front of your accountant, throughout the year. Reach out to them if they haven't reached out to you. Start thinking about making your estimates for next year and to make them online. So setting up those accounts, I would get started on that now, and then just get ahead of the game here for 2021.
Thank you, Ryan. And Mike, thank you for being with us today. And again, thank you for your service to our board of directors. Mike, your final thoughts.
Well, thanks, Guy, for putting this together. And Jeff, thanks for your introduction. It was late, but it was still good. Three things, and I try to categorize in threes, right? Be prepared and be organized and be aware. Be prepared that the IRS is inundated. They're understaffed. They have work. They have 19 tax returns they have not completed or reviewed yet. So understand that the IRS. Be prepared for, as Ryan said, for higher tax rates. The rates are going to be going up, and be prepared. So plan accordingly. Understand what that means for you. Be prepared for more audits. As we get through 2021, and the IRS is going to start getting funded again. There are going to be new audits that are going to be coming out, and they're going to be comprehensive. So, be organized. Be organized with your files. Be organized with QuickBooks. Make sure that your numbers are correct and you're able to defend them. And then, two things not on the tax side, but on the business side. Be aware. Be aware that your employees. Be aware that your business. Be aware that things are changing, and as we come out of this pandemic, like every other recession or depression that we've come into, you're going to have a hard time keeping your employees. So work with your employees currently. Make sure that you're reaching out to people that either worked for you in the past or working for you now, and keep on top of them, because once we get through this, there's there's COVID fatigue for everybody. There's COVID fatigue for working at an office or working at home. So be aware that, people are going to be searching for talent, and they're going to be looking for them. So whatever you can do to keep and retain your employees is going to be a really, really important thing. So, that's really all I have to say, but be organized, be prepared, and be aware, because, change is going to be coming, and the people that are prepared and organized are going to be the people who are going to win.
Thank you again, Mike, Ryan, and Tricia. Thank you to our audience. To take a lead from our board treasurer, three final points. One is all of these programs are available on our webpage. This one should probably be ready in the near future by the end of the week. The others will be there, a whole series of information regarding the pandemic, COVID relief, and our series on small business. They're all accessible. Take a look at those. Second is take a look at our calendar of events. We're beginning to return to normal. Each month, you'll find that we'll have at least one in-person events while continuing to provide digital programming and support. So we hope to see you in the future, whether it's in person or on your computer screen. And the third is, as always, if there's an issue or a topic you think we ought to address, either through a seminar or providing information on one of our media platforms, let us know. We have a great resource of willing members of the chamber in almost every area of business who are happy to help. So thank you all again for being with us. Thanks to our panelists. Thanks to our sponsor, Meridian Bank. We look forward to hopefully seeing all of you in person or back on Zoom in the near future. Have a great day. Take care, everyone.
Good job.